Hello everybody, I'm Juliet with my colleagues Maria Monica, Omar, Eduardo, and Osvaldo. In this video, we are going to talk about the stock market, the S&P 500, and the Investopedia stock simulator. I hope you enjoyed the video and learn a lot about these topics. First of all, let's talk about the stock market and the index S&P 500. What is the significance of the stock market? The stock market is a component of a free market economy. It allows companies to raise money by offering stock shares and corporate bonds, and allows investors to participate in the financial achievements of the companies, make profit through capital gains, and earn income through dividends. The stock market works as a platform through which savings and investments of individuals are efficiently channeled into productive investment opportunities and add to the capital formation and economic growth of the country. The term stock market refers to total exchange in which shares of publicly held companies are bought and sold. Such financial activities are conducted through formal exchange and buy over the counter. Marketplaces that operate under a defined set of regulations. Some key takeaways that we have from this are: first, stock markets are venues where buyers and sellers meet to exchange equity shares of public corporations. Second, stock markets are components of a free market economy because they enable democratized access to investor trading and exchange of capital. Third, stock markets create efficient price discovery and efficient dealing. And last, the U.S. stock market is regulated by the Securities and Exchange Commission, CSC, and local regulatory bodies. Now, understanding the stock market. The stock market allows buyers and sellers of securities to meet, interact, and transact. The markets allow for price discovery for shares of corporations and serve as a barometer for the overall economy. Buyers and sellers are assured of a fair price, high degree of liquidity, and transparency as market participants compete in the open market. Let's see how the stock market works. Stock markets provide a secure and regulated environment where market participants can transact in shares and other eligible financial instruments with confidence, with zero to low operational risk, operating under the defined rules as stated by the regulator. The stock market acts as a primary markets and secondary markets. As a primary market, the stock market allows companies to issue or sell their shares to the public for the first time through the process of an initial public offering. This is called IPO. This activity helps companies raise necessary capital from investors. A company divides itself into several shares and sells some of those shares to the public at a price per share. To facilitate this process, a company needs a marketplace where these shares can be sold, and this is achieved by the stock market. A listed company may also offer new, additional shares through other offerings at a later stage, such as through rights issues or follow-on offerings. They may even buy back or delist their shares. Investors will own company shares in the expectation that share value will rise or that they will receive dividend payments or both. The stock exchange acts as a facilitator for this capital raising process and receives a fee for its service from the company and its financial partners. Using the stock exchange, investors can also buy and sell securities they already own in what is called the secondary market. The stock market or exchange maintains various market level and sector specific indicators like the S&P and the Nasdaq 100 index. which provide a measure to track the movements of the overall market. What are the functions of a stock market? The stock market ensures price transparency, liquidity, price discovery, and fair dealings in trading activities. The stock market guarantees all interested market participants have access to data for all buy and sell orders, thereby helping in the fair and transparent pricing of securities. The market also ensures efficient matching of appropriate buy and sell orders. Stock markets need to support price discovery where the price of any stock is determined collectively by all of its buyers and sellers. Those qualified and willing to trade should get instant sales to place orders, and the market ensures that orders are executed at a fair price. Traders on the stock market include market makers, investors, traders, speculators, and hedgers. An investor may buy stocks and hold them for the long term, while a trader may enter and exit a position within seconds. A market maker provides necessary liquidity in the market, while a hedger may trade in derivatives.
What is the S&P 500 index? The Standard & Poor's 500 is the stock market benchmark index and is comprised of 500 companies, including many of the world's largest companies, which are headquartered and listed on USA exchange. The index that later became the S&P 500 was originally introduced in 1923 by Standard Statistics. At the time, it included 19 companies from 26 industries. In 1957, it was reformulated to the way it is known today by including the 500 largest companies in the United States. It is considered the thermometer of the USA economy and the most followed by investors from all over the world. How is the S&P 500 calculated? It's calculated according to the market capitalization of each company. The following steps are used to verify the weight of each component. The market capitalization of each company is calculated by multiplying the number of outstanding floats shared by the share price. The market capitalization of these 500 companies are assumed. The market capitalization of each company is divided by the total market capitalization of the 500. To calculate the index value, the market capitalization of each company is multiplied by the weight and then the weight values are summed. The total is then divided by the base year value and multiplied by 100. How does the S&P 500 work? This index is run by the USA Index Committee at the S&P Dow Jones Indices and currently represents 80% of the total USA stock market. So looking at its price can give a good picture of how the economy of one of the world's leading countries is doing. For a company to be chosen for inclusion, certain criteria must be met. A company's stock must be highly liquid and have a public float of at least 50% of the outstanding shares. The company's earnings for the last quarter and the previous 12 months must also be positive. The index is rebalanced quarterly. Companies that qualify for inclusion are added to the index, while those that no longer qualify are removed from the index. The index is calculated using the price of the securities in the index, so the index itself is not tradable. However, a large number of financial products use it as a reference price or hold their values in the same proportion as the index. As of May 2022, the following were the 10 largest constituents of the index, like Apple, Microsoft, Google, Amazon, Facebook, Tesla, Berkshire Hathaway, Nvidia Corp, JP Morgan Chase. Advantages and disadvantages of the S&P 500 index. Advantages: the S&P 500 index includes many of the world's most successful companies. The index and the products based on it are most liquid in the world. Trading instruments such as CFDs, futures, and the ETFs that are based on the index are among the cheapest and most liquid for trading. Disadvantages: with so many companies in the index, it can be slow to respond to change in the performance of certain sectors. Although the S&P 500 index includes many of the world's largest, some of the largest that are not based in the USA are excluded. The S&P 500 is heavily influenced by large technology companies like Apple, Amazon, Microsoft.
About the Investopedia simulator. Before continuing in this subject, it is important to define what is a stock market simulator. Stock market simulators are a fun way to learn about trading and investing without risking a single penny of your own money. With time and practice using the simulator, the transition to an actual trading can become seamless. But remember, once you leave the virtual world and start trading with real money, mistakes can be costly, and that bad trade can result in the loss of real dollars. There are many stock market simulators on the internet, from basic investing options and trading strategies to more complex features. For example, the Wall Street Survivor or How the Market Works. Between all of those, we have found the Investopedia simulator. This is the perfect one for many beginners and or people with more experience. The simulator is designed to help anyone to learn the mechanics of buying and selling securities in a risk-free environment. This learning tool simulates the activities investors experience with placing orders through a broker. The simulator provides real-time tracking for the changes in simulated investment value by showing users the performance of their investment. The benefits for using these simulators are: learn the basics of finances, think critically, interpersonal skills, make decisions quickly, hit the ground running. To access the simulator, you will need to create an account. The account is free and only requires that you specify your email, username, and password. As you may see here, this is how you started. When you create your account, you will be logged in. A new account has a default virtual balance of $100,000. This virtual money has no connection to real cash. Now, it might seem there are many things on the screen difficult to understand, but it is easy to discover how the simulator works by just exploring the interface and trying out its functions. The simulator is divided in 4 functional areas: portfolio, trade, research, and games. We will only focus especially on the first 3 areas. The portfolio tabs allows you to track simulated value changes for all positions you initiate. The research tabs helps you to study price charts and review company information behind the stocks available for simulated trading. Each of these functional areas can be explored quickly. It is also comforting to know that any information you might need for defending unfamiliar terms is only a click away on the Investopedia site. Let's start with the portfolio area. The most important thing you need to understand about this area is The portfolio tab lists the positions you're holding and the current value of those positions based on market data. It gives you a quick snapshot of the account's total balance, as well as the total for each individual position. The quick stats shows you how much gain or loss your account has made today, the annualized return you're making, and the remaining cash and buying power in the account. This area have also many panels, and we must check on them to know better how it works. Overview. Account value shows the total current value of your portfolio, which is updated every night after the markets close. Today's change. It represents the gains or losses as a result of today's market activity. Annual return. This is the percentage of return that you have obtained if your returns were extrapolated to 1 year. Cash. This is the total amount of cash available for transactions. Performance. Draw the graph, we can notice the changes in the value of the shares comparing them to the S&P index. Holdings. This time we will focus on the stocks and EFT parts only. As we may see, the first bar shows us the stats about the total value of our account, the today's change, and the total gain loss. We already know the meanings of the first two. Total gain loss, on the other hand, shows us how much gain or loss the account has made in an annual return. The next bar tells us about the performance of the stocks acquired. We can differentiate the type of stock by looking at the symbol or description of each one. In this case, we have Ford, Nike, and PriceSmart. Next to them, we have the current price, the today's change, the opening price, and the purchase price. The current price is an indicator of the current value of our stock at a given time. The today's change is another indicator to know how the current price has changed compared to the opening price. The opening price of a stock refers to the price at which a stock starts when the stock market opens. Remember, the stock market opens at 8 a.m. and closes at 5 p.m. The purchase price tells us the price an investor pays for a share during that week. The quantity only symbolizes the number of stocks we bought, and the total value is how worthiness the stocks are depending on the current price. Executing a virtual trade.
Trade area. Selecting the Trade tab gives you access to the place where you can execute trading orders. Here, you will first want to specify the ticker symbol of the stock you want to trade. A price quote and chart will appear so that you can review the price at which the stock is currently trading. When you have reviewed the price information, you can specify the action you want to take with your order: buy, sell, short, or buy to cover. How to buy stocks. Buying stock in Investopedia simulator is like buying stocks with an online broker. You place an order for shares of the company you want to buy. The simulator uses the same steps to complete the order as those you take with a broker. You specify the ticker symbol to trade symbol, the number of shares, quantity, the type of order you will use to buy shares, order type, and how long the trade is open for, duration. The user interface for broker varies, but these essential elements do not. The type of order you use to buy shares and the duration of that order can have a big impact on how the order gets filled and the price that you'll pay for the shares. Here's a quick explanation for both elements. Market order. This type gives you the next available price after you submit the order. It might be higher or lower than the last quote price, but your order will be filled as fast as possible. Limit order. Limit order allows you to specify the maximum price you are willing to pay for the shares. The broker will fill your order at that price or lower, but not higher. If you specify a price below the currently quote price, you may have to wait a while before the order is filled. Stop limit order. This is a special kind of order that allows you to buy the shares if they go higher, but you still have a limit on how much you'll pay. Day order. This will keep the order active until it is filled or until the next trading session ends. How to sell stocks.
The process of selling a stock in the Investopedia simulator is the same as buying it. You just have to change the action to sell and specify the rest of spaces, symbol, quantity, and order type. In the same way that investors can use different types of orders for purchasing stocks and options, they can also use different order types when they sell. The simulator, just like a broker account, allows you to submit market, limit, or stop orders for closing a trade. Market order. Closing a position with a market order means you accept the next available trade regardless of the quote price. Limit order. A limit order allows a trader to specify the minimum acceptable price level a trader is willing to receive for the stock shares or option contracts they are selling. Stop order. Brokers offer this type of order so that an investor can trigger the sale of an investment if it falls below a specified value. Stop limit order. This order type is similar to the stop order, except that once the order is triggered, the broker executes a limit order rather than a market order. Research area. The Research tab helps to study price charts and review company information behind the stocks available for simulate trading. It offers these two options because some people prefer to conduct thorough due diligence by reviewing the business statements of a company before deciding to buy shares. This kind of fundamental analysis helps investors have the confidence to put money into stock and leave it there for months or years. On the other hand, some investors are comfortable simply reviewing price charts and conducting technical analysis of stocks. Both types of analysis can be conducted quickly by looking in the research section by simply clicking on one of their ticker symbol displayed on the research pages will take you to a summary page complete with an interactive chart, company profile, and fundamental data. The research page also has a powerful stock screener built into it. This allows you to specify one or more attributes of companies you'd like to research. The functionality of this screener is very deep, but you don't have to know everything about it to generate a list of possible stocks to review.
A better analysis of the stock through Yahoo Finances and Investopedia. We can analyze more properly the performance of our stock at any moment by making use of the Yahoo Finance platform. The Investopedia simulator will give us the current price of the stock at a specific moment, which is very useful, but it doesn't show you the complete efficiency of the stock since the market starts to this point. For that, it is important to check another platform as Yahoo Finances. To do that, you must find the enterprise that you are investing in and immediately a chart with detailed information of the stock company will appear. There is plenty of information on this chart. The most important in this case is the graph on the right side of the page. The graph shows us the previous close price and the opening price of the stock in the market and the efficiency during this day as well. The Investopedia simulator uses these prices to know the today's challenge of the stock and the gains or losses generated. Continuing with this graph, if it goes down or is in a red color, it pretty much means that the value of the stock has decreased this day. On the other hand, if the graph goes up and is in a green color, it means that the value has increased. We can also see if the value of the stock has increased or decreased in periods of 5 days, 1 month, or even 5 years. This information will help you to know how well the company has been doing and if it is recommended to invest on it. However, it is always important to make further research. The analysis will be done observing behaviors between the opening price and the current price. The today's change count will also be considered to a better understanding of our profits and losses of Ford Company. 2,202 shares were acquired. For Nike, 250 shares were acquired. And for the Price Smart Company, 292 shares were acquired. Ford Motor analysis. Starting with the analysis of Ford Motor, at the beginning of the day, it presented a 0.81% increase in its shares, slightly increasing its price, which generated a total profit of 250 US dollar with 15 cents, not much higher than Nike. Sometime later, it presented a decrease of 0.23% in its shares, affecting its price. This decrease was the highest among the companies in our portfolio, and in turn, the largest total loss, being 72 US dollar with 23 cents. At the close of the market, the share established thanks to an increase of 1.78%. That increase at the end of the day left a total profit of 550 US dollar with 50 cents, making it the company within the portfolio that obtained the highest profit. Nike analysis. Nike initially presented a brief increase in the value of its shares of 0.79%, increasing its price. That fact generated a total profit of 250 US dollars, being the lowest profit in the portfolio when buying them with the other two companies. Sometime later, it presented a slight decrease of 0.07% in its shares, leading the total losses of 22 US dollars. At the close of the market, the price of the share increased. That increase left a total profit of $412 with 50 cents, making it the company in the portfolio that obtained the least profit. Price Smart analysis. Price Smart initially had the largest increase in share value at 1.25%, which increased its price, making it the company with the highest total earnings in the portfolio, 392 US dollars. Sometime later, it presented a significant increase of 1% in its shares, which led to an increase of its price. As the market closed, the share price continued to rise. That increase at the end of the day left a total profit of 544 US dollar with 88 cents, making it the second company with the portfolio to earn more.
Analyzing the information from Wikipedia Simulator and Yahoo Finances, we can say that the company in which more favorable to invest is Ford Motors, due to its good behaviors of shares and total profits.